All right, diving into clean energy today. And this one is, well, this one's kind of spicy. Fresh off the election, lots of buzz. We're using this Motley Fool article as our guide. They're looking at Rivian and Enphase. What's really interesting to me is they're not just doom and gloom about clean energy, even with all the post-election jitters.
Yeah, it's a good point. The knee-jerk reaction right after the election, especially from clean energy investors. It was, well, a lot of them were freaking out. They saw all those incentives potentially going poof.
Makes sense. The article even specifically mentions the IRA, the Inflation Reduction Act, as a possible target. That thing really pumped a lot of money into clean energy under the previous administration, so I see why people are nervous.
Oh, yeah, and don't forget about those rising interest rates. Those were already putting the squeeze on clean energy. So, yeah, you put those two together, and it's a recipe for some serious anxiety.
Okay, so we've got the sky is falling, folks, but this article is kind of like, hold up, not so fast. What are they seeing that maybe others are missing?
Well, they make this really interesting point about the IRA. A lot of the spending and the jobs it's creating, they're actually in districts that voted for the new administration. So politically speaking, makes a full repeal a lot harder to swallow.
So it's not just a simple undo.
Yeah.
What else makes them think the IRA might survive?
Well, they point out that 18 lawmakers from the new administration's own party, they've already said they're not cool with a full repeal. So it's not like everyone's on the same page, which would make it way harder to make big changes.
That is interesting. So we've got pushback from within, and then there's, the whole Elon Musk thing.
Right. The Tesla CEO, he's been pretty vocal about his support for the new administration, and he could really swing things. When it comes to clean energy, he's a total wild card.
Yeah. Okay, so politically, things are still a bit messy, but for those of you listening, it doesn't sound like a total clean energy shutdown is going to happen.
Yeah, I'd agree with that. And the article even suggests that some clean energy companies might actually be in a good spot to deal with this new reality. They take a close look at two in particular, Rivian and Enphase.
Okay, let's start with Rivian. Those are the folks making those fancy electric SUVs, right? And I think they're also making electric delivery vans for Amazon.
You got it. They're finding their little corner of the EV market. Right. And like a lot of EV stocks, they took a hit right after the election, but they've bounced back since then.
They have, but their stock rebounded even before their recent third quarter earnings were released. Is there something else going on there?
That's a good question. It could be that they're focused on the higher end of the market, with those luxury SUVs. Plus that huge deal with Amazon, that could be shielding them from the economic headwinds, people buying those high-end EVs. They're probably not sweating inflation as much.
That's a good point. And speaking of big deals, didn't Rivian also just snag a partnership with Volkswagen?
Oh, yeah, absolutely. They're going to license their tech to a Volkswagen joint venture, and that's going to bring in some serious cash. Up to $5.8 billion through 2027. That's a nice little boost for Rivian. Could help them get that R2 SUV out the door faster, give them a real edge in the EV game.
So for those listening, the R2, that's Rivian's next big product launch. And this Volkswagen deal, that could really help them out. But they've also been working on becoming more efficient, right?
Yes, they have. They've been making progress on lowering production costs and their capital expenditures, which is huge for any manufacturer. And get this, they're actually predicting a positive gross margin for the fourth quarter.
Okay, so break it down for us. What does a positive gross margin mean for Rivian, and why should we care?
Okay, so positive gross margin, that means for every R2 SUV they sell, they're actually making money on the sale, which is huge. It's a big step towards becoming a profitable company. And considering they've been in the red for a while now, it's kind of a big deal. Okay,
so Rivian's got their eyes on the luxury EV market. Let's switch gears and talk about Enphase. They're all about solar tech, right? Specifically those microinverters.
That's right. Enphase is a leader in microinverter technology, which is a key part of any solar energy system. Now, like other solar companies, they've been hit hard by rising interest rates. Their stock price has really taken a dive since 2022.
Yeah, rough couple of years for solar, for sure. But the article points out that Enphase is still making a profit, which is pretty impressive considering everything that's going on.
It really is. It shows how strong their tech is and their position in the market. What sets Enphase apart is their focus on these microinverters. They've got some big advantages over the traditional string inverters.
Okay, gotta be honest. Not totally clear on the difference there.
Oh, sure. So in a traditional solar system, you've got one central inverter. It converts the DC electricity from the panels into AC electricity that your house can use. That's the string inverter setup. But with microinverters, each solar panel has its own little inverter right there on the panel.
So it's like each panel has its own mini brain instead of relying on one big central brain.
Exactly. And that's where the efficiency comes in. With a string inverter, if one panel's in the shade or not working right, it drags down the whole system. But with microinverters, each panel does its own thing. So one shady panel won't mess up the others.
Ah, that makes a lot of sense. So I'm guessing that efficiency means a higher price tag for Enphase's products.
You got it. They can charge a premium for their microinverters because they offer real benefits, and you can see it in their financials. The article compares Enphase to their competitor, SolarEdge. They use a chart to show the difference in profitability.
Okay, well, we can't see the chart. But what's the main takeaway there?
The main point is, even in a tough market, Enphase has consistently done better than SolarEdge when it comes to making money, which suggests they've got a pretty solid business model.
That's good to hear, especially with everything going on in the economy. But even with strong financials, they haven't been totally immune, right?
True, yeah. They had to announce some layoffs recently, let go of about 500 employees, just to manage costs and protect their profits.
Yeah, it's never good to see people lose their jobs. But it does show they're being proactive. Anything else they're doing to weather the storm?
Well, their revenue is down compared to last year, but both revenue and operating margins, they've actually improved over the past 2 quarters. So that kind of suggests things might be leveling out, maybe even a turnaround on the horizon.
Interesting. Okay, so we've got Rivian going after that luxury EV market and Enphase holding strong in solar, both facing challenges but adapting. Seems like this article is painting a different picture than all that initial doom and gloom after the election.
It is, yeah. It really is, and it kind of raises a question.
Okay, I'm listening.
So, if a full-blown repeal of those clean energy incentives, if that's unlikely like the article suggests, could this actually be a good time to buy into clean energy? Maybe a contrarian opportunity for those who are willing to take a chance?
That's a really interesting question. It does seem like the clean energy story isn't over. There are bumps in the road for sure, but there's also innovation, resilience, maybe even some unexpected opportunities out there.
Exactly. And that brings us back to Rivian and Enphase. The article uses them as examples of companies navigating this new landscape. Rivian's got those big partnerships and that focus on a market that's less sensitive to price. While Enphase is using its tech advantage to stay profitable, they're both weathering the storm in their own way.
So for our listeners who are interested in clean energy investing, sounds like it might be time to dig a little deeper into companies like Rivian and Enphase, or maybe explore some other clean energy companies who could benefit from all these changes.
That's a great idea. I think the big takeaway here is there's more to the story than just the headlines. The clean energy sector, it's dynamic. And like with any investment, you got to do your research, understand the companies and the trends.
Absolutely.
Yeah.
Don't just jump on the bandwagon or panic and sell everything off. Take a breath, look at the data, consider different viewpoints, and make informed decisions.
Couldn't have said it better myself. And remember, there's always more to learn. Keep exploring, stay curious, and don't be afraid to question your assumptions.
This Motley Fool article, it really gave us a lot to chew on. Started off with all that election uncertainty, how it might hit clean energy, but we found some pretty interesting stuff along the way.
Yeah, for sure. It definitely made us rethink some things, and it shows how tough and adaptable the clean energy sector is.
Yeah, it's a good reminder that things aren't always so simple. The politics are complicated. And these companies, they're finding clever ways to deal with it all, and even find opportunities in the chaos.
Exactly. And for everyone listening, I think, the big takeaway here is stay informed and be open to different viewpoints, especially when it comes to investing. Don't just follow the herd or freak out over headlines.
Right. Do your own homework. Dig into the details. And remember, clean energy, it's always changing. There will be bumps, no doubt. But there's also huge potential for growth and innovation.
Well said. So keep learning, keep exploring, and stay curious about clean energy. Who knows what exciting stuff is just around the corner?
That's a great point to end on. Thanks for joining us for this deep dive. As always, we encourage you to keep digging and form your own conclusions.
Absolutely. And until next time, happy investing.